Hey everybody, hope everyone's doing well and had a good day. And in this video, I'll do a brief review of the Emini 5-minute chart for Wednesday, August 13th, 2025. The first thing I want to talk about is the gap up going into the day. Whenever there's a big gap, we're missing information, and I like to know if there's a sustainable small pullback trend on the Globex chart, or maybe there's a completed spike in channel and the market is evolving into a trading range. So here's the 15-minute Globex chart. Here's the information we had going into the day. Here's the close of yesterday. So we got a trading range which eventually broke out to the upside. And now we have a spike in channel bull trend. And it looks like those are reasonable support and resistance lines for the spike in channel. And as we go into the day, we can see that the market is breaking out above a channel line. We know that most of the time, bull breakouts of bull channel lines reverse within 5 bars and then test the trend line. We also know that on the open of the day, any breakout on the open, no matter how strong it looks, has about a 50% chance of reversing. Plus, most days have trading range opens, which means most days are not trend from the open days. So bar 1 is the low of the day. Let's go back to the RTH chart. So we can see yesterday's high as well. Trend from the open for the bulls, but especially bars 1 through 3 have a lot of overlap, which is channeling behavior on a smaller time frame. This is a channel, which means 4 and 5 might be a breakout above the channel line on the smaller time frame. So this is parabolic in nature, which is unsustainable. You have bulls. You have to think about where we are in relation to the moving average. We have bulls buying way above average price, and if they're going to do that, they need far above average bullishness. So bulls will buy momentum, but then we get a smaller body, 5, so momentum slowing down, and then 6, obviously a bear breakout, and 7, follow through. This is not what the bulls want to see. Bulls who are buying, they probably, let's say you bought below bar 5, stop below 1. You bought here and you scaled in at maybe a 50% pullback of the rally on the open, which maybe it's to here. You can see the market gave you an opportunity to exit at break even if, let's say you bought the low of 5 and the midpoint, the 50% pullback. Bar 8 gave you a chance to exit. Bar 8's a pullback after the bear breakout and follow through, which was likely to get a second leg. So here's the pullback, and then the second leg was very strong. It grew into bars 11 and 12, accelerated, and 11 and 12 probably reset the leg count to some degree. So probably 11 through 12 and 13 needs a second leg of its own. 13's a weak stop order buy setup. A bad stop order buy is a good limit order sell, and that's true all the way down. Tight channel, bad stop order buy 18, sellers above. Bad stop order buy 17, sellers above. But after 3 legs down to 21, 21's a reasonable sell above. 20 is better because it's a strong bear bar. But either way, it's after 3 pushes down. So you may get a 2-legged correction sideways to up and a test of the 3rd leg, the 19 high, which we quickly got on 23. 22-23 is a small surprise against the bear breakout. But the bear breakout, if we just take a look and compare the sizes and the strength of the bears to the bulls, this reversal and follow through is much smaller than the bear breakout. This is probably minor. That doesn't mean the bulls will not get a second leg. It just means that If the bulls are buying, they're scalping because it's still probably always in short. 22.23, at this point the bulls do need a second leg. There's probably buyers below 23, bad low 1. But again, buyers below for a scalp. The big bear breakout still needs a second leg of its own. So 22 is a good signal bar for the bulls. Maybe the bulls, if they can break the trend line further and then get a higher low, maybe we have a low of the day. But at this point, we probably have not seen the low of the day because breakouts usually get second legs that test the extreme. This was interesting. It was 25, the second leg for the bulls. It might have been, so maybe 24 was a pullback of the pullback, bear breakout, pullback, pullback of the pullback, and then 25, second leg, testing the high close of 23. But 25 may not have been enough. Maybe it was not symmetrical enough in size. And then the bears had an inside bar for their signal bar for the low 2. And we had to go higher to find sellers, but 27 is now a second leg trap at resistance in a bear channel. Maybe it's a trading range, but either way, best case for the bulls is a trading range. So 27, not an ideal place to be buying. It broke out above the bars to the left, but it did not break out above the first pullback above 13, and then it did not get followed through. So 28, maybe a sell to close bar, be willing to scale in higher. The bar is small risk, so low probability. The bears have good risk reward, and the alternative is to wait for the bear breakout 29. Now you have higher probability, but worse risk reward, less profit remaining in the trade, and your stop is further away if you have the stop above 27. But we're still probably going to a new low of the day. So reasonable to sell and reasonable to sell a pullback. Sellers at the 27 low, 28 low, breakout points. And now it looks like the market is evolving into a trading range. If we do get to a new low, there's probably buyers below 22 and at yesterday's high. Because we broke out above yesterday's high, it's probably support. We broke out far above it. Now we have a couple of legs down to 37. 37 is a strong signal bar, but the body could be bigger. And it is a double bottom, but we just had a fairly tight channel down to 37 without a very significant trendline break. So we may need a trendline break first and then a retest of the lows before there's any major reversal. But 37, I think it's okay to exit shorts above 37, and it's okay to buy with a stop order with expectations. You need a good entry bar. Ideally, the entry bar is a bull breakout crossing the moving average, and the bulls don't get it on 38. But 38 is a low 1 near the bottom of the channel. It's not ideal for selling either. Another reversal, better for the bulls. Now we have 3 legs down. 1, 2, 3. It's a nested spike in channel. We have a spike in channel trend, and then within here, 29, spike, pullback, channel, 3 legs down. Probably will correct for a couple of legs sideways to up, and maybe even get a reversal. It's a bullish environment on the daily chart, so for there to be a bear trend day would be a bit of a surprise. Small surprise, 43, second leg likely, but testing resistance. We're testing an area where the last time we were here, the high of 38, we sold off to a new low. So not ideal for buying, probably buyers below 43 and at a new low of the day. And then reversal down, but a bad low 1, probably buyers below. Again, the channel line here is support, so bears will take profits in this area, and bulls will start buying, betting that the channel evolves into a trading range. And if that's the case, we could test all the way back up here. 3-bar micro channel, but it might be an expanding triangle. And the bodies are shrinking, so we're losing momentum. And 48 is the first bar to close above this swing point 43, so it needs follow through. So the bulls are losing momentum. It might be 3 legs up in a breakout mode situation. It's an expanding triangle. Rather than buy up here, just like here, it might be better to buy a pullback like below 43. In this case, maybe below 47 or even 46, which would be right near the channel line as well. Sharp reversal down, but it's similar to 44. It's not really breaking out of much. It's a late leg in a channel, which is probably evolving into a trading range. Bear channels that last a while do not have 3-bar micro channels like this. We went above this swing point as well. This is enough two-sided trading. It's probably already in a trading range, which means if we're low in the range, we may go back to the midpoint and maybe even the top of the range. Pretty strong breakout, controlled buying, uniform size bars, nothing very climactic. This is pretty good for the bulls. Expanding triangles can be major reversal patterns, and we just had an expanding triangle and possibly a higher low major trend reversal. 54 might be by the close, but be ready to exit quickly if you're disappointed. Weak reversal, 56, probably by the close. 57 might be a profit-taking bar. It's one of the big bars in this rally. It's testing resistance. 58, probably not a strong sell, tight bull channel, but we may need another leg sideways to down, but it's probably a minor reversal. We'll probably test higher in the range. This was strong enough for a second leg, but because of the environment, it's a trading range, the pullback can be deep. It can be deeper than 50%. So rather than buying up here, traders might buy the 50% pullback, the moving average, the breakout point, 49 high. There are options to buy lower. Most traders won't buy below 58, a bear bar closing on its low, but they will buy below a strong bull bar, 57. Inside bar, buyers below, but a bad high 1 at the top of the range. And then a second entry short on 60, more reasonable to sell and more reasonable to look to buy lower, but still probably a minor reversal. And then trying to break out to a new high after the high 2, but we're still at the top of the range. Bear breakout attempt, but testing maybe that midpoint and maybe a little lower, testing the buy zone of the trading range. A 63 reversing up, micro double bottom, probably going to test the highs, but the upside is probably limited. The only thing I will say about the day structure at this point is that trading range days, there are 2 magnets. One is the open of the day, and the other is the midpoint of the day. So the upside is probably limited, but there are magnets above that we could get to. And again, after this rally, the bulls have not had their symmetrical second leg, and they probably will get a better second leg than bar 61. And this is a better second leg from the low of 62 to the high of 66, but still no major reversal. 66 is a weak stop order sell, so it's a limit order buy. Better second entry below 68, but still a small bar in a tight trading range, not ideal for selling. And the bulls vacuuming up to test the midpoint of the day. Another weak sell on 70, probably by the close. 71, nothing to sell with the magnet above the open of the day. Weak sell below 71, buyers below. 3-bar micro channel, 4-bar micro channel, but testing support. This probably needs a second leg down, but the pullback could be deep, meaning we could go and test the highs before the bears get their second leg. Bull breakout with bodies increasing in size, but a little parabolic on 77, and also 3 pushes up, testing a channel line, also testing that magnet, the open of the day. Might be a sell to close bar for taking profits. Selling the close 77 to go short is definitely more aggressive. And then a reaction to the open of the day. Trying to break above it, but we failed. We stayed right around it for the last few bars of the day. That's going to be it for today's review. Thanks everybody for watching and listening, and I hope everyone has a great night.